Um, so question for you. You mentioned yesterday that if we have short, if we hit short on close and then we turn it off, if I hit the enter key, it's going to turn it green again.
Correct.
All right.
Yep.
You want to see something interesting?
Sure.
Okay, so I'm going to grab this chart over here. And I am going to be in Sim 101. I'm going to leave this at none. And I'm going to say market short.
Order filled.
Okay, so this is in Sim 101, right?
Mm-hmm.
If I go to my keyboard and I hit enter, look at what happens.
Order filled.
Yeah.
Order
Okay.
filled.
Do it again.
Order
Every
filled.
time I hit enter, it's adding to it. So it's not conducive just to my coding.
Yeah.
It's that it remembers. Now, having said that, it's a bad thing. I don't want anybody to be in the situation where they're doing this. So, all right. So let's assume that actually, while we got everybody here, right? So I've got I'm in Sim 101. I've got 4 on, but I don't have an OCO with a stop and a target. Now, there's a few ways of handling this, right? What you can do is you can go to the control center. Here's the control center and go to positions. All right. So I'm in positions, right? So you can right click on this and you can say apply an ATM. And I'm going to apply this one here. And all of a sudden, like magic, you've got your OCOs back, right? So you can grab your stop and you can move it again. You can do however it is that you want to do it, right? Same number of orders, targets, whatever the money management was, it's all in, right?
Mm-hmm.
Now, so everybody saw that, right? You just right-clicked on this. You applied an ATM. So actually, that's interesting. I wonder if I were to do this. Oh, yeah, it gets confused. Okay.
Target
Don't
filled.
apply it twice.
Order canceled. Order
Get rid of the
canceled.
OCOs. So I've got one that got out at break even. Now, let's assume that you're just trading one and you want to deal with this, right? And you don't want to be messing with the OCOs because they could potentially cause you grief, right? Well, what you do is you just put in limit orders and stop orders to control it, right? Well, we're here, right? We're short. So a limit order will get us out profitably. So just right click down here, go to a limit buy of 1.
Order
And
submitted.
grab that and you put it over here, right? And say, okay, this is where I want to get out, right? So if it comes down to there, thank you very much, I made money. If you want to get out of this trade, right?
Order filled.
Yeah, sure, of course. Okay, I'm gonna sell another one.
Order filled.
All right, so if you want to get out of this trade, let's put our limit down here for our target.
Order submitted.
So there's our target, and we want to get out on this side over here. Well, you just right click on this and you put in a buy stop, right, at that price.
Order submitted.
So now if it comes up here, we're going to get out with this exit. And if it comes down, we're going to get out with this exit. Just remember, these are individual orders and they're not OCOs. So the auto trader is not going to, let me mute my other computer. The auto trader is not going to get rid of the other side of the trade, right? So you'd have to go in and canceled. Do it. So there's 2 ways of handling this, right? You've got, if you've got your order, you can put in orders above and below the market. That takes some dexterity, practice it before that you start doing it. But yeah, you can control the market like that, no problem. Remember, your friend over here is the close button, right? If we're short filled. And the markets and we're in a panic, we don't know how to get out, just come over here, you click the close button, right? And it's going to get you out at the best available price for the moment, right? So I'm going to click close.
Order filled.
There's our profit, right? So you can control your ATMs a couple of different ways. If you haven't done it before and you want to control it, no problem. Just remember that whenever you see, so everyone, when they're running, they should always have the control center on the positions tab so you can see all the trades that are here. There's nothing worse than not realizing that you're in a trade and thinking that you're out. So this will list all of the trades that you're actually in. All right, so just right click on it. You can attach an ATM. If you want to control it manually, you can you can put in targets to tell it where you want to get out. And if you just want to close it entirely, just click the close button. Just remember that if you click the close button and the auto trader is running, it is going to stop the auto trader as well. It is a safety feature built in NinjaTrader that allows us to do that. So I actually have this chart twice. I want to get rid of this one.
I just want to make sure I'm a little curious. If you enter a trade, say with the sell market at the top, right? The auto trader will not take another position.
It should not. It's supposed to be checking. It actually is not aware of trades that it has not taken. So it should not take it. If it does, it's going to clobber it.
Well,
so you're asking, will it take another trade?
Yeah, well, in other words, okay, I decide that I want to use the sell market button instead of, the discretionary short.
Yeah.
And, I'm just curious, is the auto trader, if it's unpaused, going to take an additional position?
No. If it's paused, it's not going to take it. Well, I'm sorry. These four buttons here, they totally override everything. They ignore paused. They ignore at max loss. They ignore at target for the day. These are like touching these buttons, taking another trade.
Yes, I understand that.
Right? So if you click this button and you're in it, if you're long and you take a short, it's going to clobber itself out.
Good morning.
I guess I'm less interested about those particular four buttons than, if I use the sell market or buy market.
It works the same way.
Right. But let's say I've established a position with the sell market. That's established with the top right button.
Yep.
And the auto trader is unpaused.
It will take a trade. It'll take a trade. And it will, well, if it's unpaused and you've got the longs and the shorts on, it may take another short. If it takes another short, it's forgiving, right? Because it's just, it's going to average.
Price average, sure.
Right? But if you're long, a few things can happen, which are not good. One, it will leave you, it will close your position, but leave your OCOs open.
Okay.
Which is not good because those are all active orders.
Right.
Or it will not leave you any OCOs, and it will just leave you naked in the market.
Mm-hmm.
So you shouldn't be trading. So one auto trader per instrument per account, right? So if you want to run a 10 range and a 6 range like Ed does, both at the same time, no problem. You can do it in simulation. You have one in Sim 101, one in Sim 102, or however many accounts you have. If you want to run them both on the same account in cash, you can't do it because you've only got one account. So maybe you've got an account under your wife and you want to trade one way, one the other way, no problem. If you are allowed, technically you're not allowed to have a second account, technically. You can, because they don't want you to be trading short in one account and long in another. That's against the rules. However, if you call them up and say, listen, I need 2 accounts. I need one for discretionary trading so that when I take my trades manually, and I need one for some auto traders that I bought and I can't trade them in the same account, they've got no choice but to allow you to do it. So you're going to be paying double the data fees, double the commissions. It's for each trade that you take in each account. But normally, if you call them and you say, listen, I want two accounts, they won't let you. I've tried. And they quote some futures bulletin of some kind that says that you're not allowed to be be long and short at the same time. All right, so we've had a nice little bounce off of our moving average back up into this little zone up at the top. It's getting a little bit late, but we're riding up here at the top. If we look at our 30-minute chart, our 30-minute chart is sitting right in the pocket below the 10th and the 12th down here. It's actually in a very precarious spot, because if we go down all the way down to the yellow line that we had made on the 10th, there's lots of free space all the way down there. It'll probably make a nice zip all the way down to S2 before that we get any type of reprieve, because we don't have, well, we've got a little bit more movement down here. Actually, I hadn't gone that far back. So yeah, look at that. So this whole area here, S2, is going to be a good area to try to get a bounce from. We've got another swing here. Let me grab this line. Let me move it up. All right. So I've got, usually I don't go this far down, but we've got two decent swings here. We've got this guy here. Actually, this one should come down a little bit lower to the bottom of that wick. All right. So we've got the swing on February the 10th. And another swing on February the 1st. I still don't understand how we're trading all the way up here. Don't understand how we're trading all the way up here. It doesn't make sense to me with the way that the market is and the shambles that we're in, how we're sitting up here, but whatever. We don't really care about where the market is at. We just look for our patterns, our support and resistance areas, which is great. Just make your donuts and go home, if I can quote Ed.
Yeah, you can quote me.
I can quote you. Good morning.
Good
Everything
morning.
go good with the doc?
Yep. I put a big essay in the chat if you want to distribute it.
All right. How about I distribute it and we talk about it as well. As I started reading that. All right, so let's do this. Boom. Whoops. When the market is slow, waiting for the future is an exercise in confidence and belief that you are reading the price action as well as you can. The lack of instant gratification of positive outcome of your decision, that's a mouthful, Ed, requires you to firmly believe in your analysis of the three attributes of chart trading: price action, volume, and momentum relationship. It also requires you to decide to stay in the trade or get out when you see it start to fail. And more importantly, where exactly does it fail? The stop loss. Let me squeeze this up.
It's in the chat in Zoom. You don't have to go in Skype to see it.
Sorry?
It's in the chat in Zoom.
Oh, it's in Zoom too?
Yeah.
Oh.
Well, I mean, I put it in.
Okay.
in
So if
Skype.
anybody wants to read it, it's there.
No, but it's only on the host because I can't chat to the group.
Really?
Yeah.
All right. Let me finish reading this.
You want me to read it?
Sure, you can read it. Let me go get something to drink.
Okay.
Actually, I got it here. Don't have to go anywhere. I'm listening. Go ahead.
All right. So when the market is slow, waiting for the future is an exercise in confidence and belief that you are reading the price action as well as you can. the lack of instant gratification of the positive outcome. That's what we're always looking for. We want to know, we put a trade on, we don't want to stay in the risk. You know, anything can happen. The next ticket could go sideways. Who knows? So we're not going to be instantly gratified, and we have to live with that. That's what we want, but it's not going to happen. So it means that you have to actually believe in what you analyzed and that you've got all the parts correct in your analysis of the three attributes of chart trading, which is the price action, the volume, and the momentum. That means how fast volume is coming in, how fast orders are being filled, how hard they're hitting the bid or the ask. It also requires you to stay in the trade or to get out of it when you see it start to fail. And more importantly, where exactly does it fail? And these kind of things you have to determine beforehand. The first clue is, where's your stop? If your stop is too big, you know you're going to have to cut it short before you hit that pivot that you have to put your catastrophe stop behind. So the stop loss is for the catastrophe event. Your computer goes down, something like that. It's not to actually end the trade unless there's a catastrophe. So you have to decide when the trade starts to fail. So you can take the smallest stop losses you can. The trade fails when one or more of these three attributes of price line up against your entry. So patience is what's required most of the time. You just have to let it play out until it starts to indicate to you that these forces have aligned against you.
Well, isn't it mostly just price? If price breaks the support area that you're on, then you want to get out, right?
Say again?
Isn't it just if we break support or resistance and we're positioned in a, I mean, we can take a trade and we're here.
Well, the next
Tucson sent me a
sentence
trade
gets to that.
yesterday.
Next sentence gets to that.
So Tucson took a trade yesterday,
Yeah.
And he took it here. And he says, "Well, why did this fail?" Right? Well, he took the trade here, and yeah, it's come back. We got 4 green bars. A moving average is falling, but he took the trade here. Now let's ignore the fact that the POC was there. Your real support area is your real resistance is up here in this zone. So did the trade actually fail? No, it didn't fail. What it did is it wiggled around some more before that it actually went down. It's just that our stop was too tight for the trade that we were taking in. The real place to be taking the trade was up here at this line over here. So if your stop was in the proper place, the wiggle room that it needed was sufficient, right? So to your point, you're saying, well, the market is moving around, it's doing whatever, and we need to align the volume and the price action, et cetera, right? But your stop has to be in the proper place too, right? If your stop is up here and we trade over it, well, we know that the trade is actually broken. But if we take the trade here in the middle of the range, irrespective of the POC, and it's closing down, right? Well, okay, we're taking a chance on taking this. We're saying we only want to risk 12 ticks, but our stop really is up here. So whenever we take a trade, we want to take it so that our stop actually is in the proper place. Otherwise, we're taking a 50-50.
Yep. So if you cannot handle that stop, don't take that trade. If you take the trade and it starts trading up, say it starts trading up into those boxes to the left, midway up, that you just showed. Well,
Okay.
if that starts to happen, then you have to decide, is it worth my risking? Because it's already proven to you that the resistance that you thought, which is actually at the bottom of those series of boxes to the left, that blue line is actually in the wrong place. I mean, it could be there, but it's not for this trade. For this trade, the resistance was right under those boxes.
Yeah.
Okay, so you would go short when it taps it, knowing that on the other side of the box it's failed. And that's 10, 12 ticks. That fits.
Yeah.
But
So
to take it there, to take it, where was that, a short or a long?
it's a short
Short.
right here.
Yeah. So then your realistic catastrophe stop really has to be on the other side of the top of the boxes. But the trade's going to
Yeah.
fail if that bar starts trading into those boxes to the left, halfway
Mhm.
up. Yeah, now you're in trouble. So you have to decide, is it worth my risking? Because we don't know the next tick, but every single tick up until that point is going against you. Now you look it down at the volume. If it's ticking up and there's no volume, well, maybe then okay, stay in it because there's no volume. So the reason they're ticking up is because they're buying and selling their own stuff. You know how they do that? They hit the bid, they hit the ask, they hit the bid, and they just keep pushing it up against you. If they'll do that to entice traders to capitulate their position, they don't want bus riders, or to get traders to think the other way. So if that starts to happen, you have to, say, okay, I'll take a 5-tick loss. Should it come down and hit that pink bar, well, you can always get back in. Where it broke down out of the box. But all this is at the hard right edge. So where the pink bar is would be a confirmation that, okay, it is going to work. It was resistance. So let me just, get back in. Because the blue line that you have up there, it could be valid for some other trade, but for this one, the blue line was at the bottom of those boxes. If you put that at the hard right edge, it will look different than, a little more to the hard right edge. There. Okay, well, you even have a green line there. So that's where the resistance was, and that has to hold. If it starts to break and it starts trading into the middle of those boxes to the left, well, then that resistance is breaking. You can say, well, I'm going to rely on the next resistance up. All right, but now it stops getting bigger and bigger.
If you want this trade right here and you're interested in and you think that it's going to hold, the place to take this trade is not here with our signal. The place to take this trade is at the bottom of the boxes. So you take a trade in here, and then you know that you're wrong when you trade over the top of the boxes. Right now, this trade requires 2 full bars and a little bit more worth of risk because you're getting in down here, and you're doing things. The other thing that you can do is you can just hit. You like the trade. If it comes back up halfway, 3/4 up the bar, click the discretionary short button, and that'll get you in over here. Your stop will be a lot smaller than this, as opposed to expecting it to make its way down. Right, and that way, if you're inside a box, at least you know that your exit's going to be before the bottom of the bar that you were on. But I digress. You want to finish reading your essay?
Sure. I'm only using your charts today. So I need to see it.
It's Friday, right?
Yeah, I'm done. I already posted everything. Okay.
All right.
So yes. So patience. Patience is king. You have to wait and let things play out. Detachment from the memory of fear of loss is required. So while we're sitting there waiting, our thoughts are, oh, I just lost the last one, and I had a losing day yesterday, and I've lost, we just keep thinking loss, 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 loss. We don't really remember the wins so much. So you got to put all that stuff out of your head. The way you can do that is continually looking left and walking it forward bar by bar to the hard right edge where your decision was made. And this will keep you focused on current exchanges of the supply and demand as it relates to the support and the resistance already established. So everything is to the left. To the right, we know nothing. We have a expectation based on pattern recognition, but that's it. And the most current information is the bid and the ask exchange, the supply and demand. We look at volume, how many trades are being done, how fast it's being done, is momentum waning, are the orders coming in fast or slow, which one are they hitting, the bid or the ask. All that stuff is current as it's ever going to get for us. And that's what we need to focus on. So the market doesn't move by limits. Limits are orders waiting. The market moves by whoever is hitting the bid or the ask, or whoever's supplying the volume into the market. And that's what moves it. So if the supplier gives contracts, that's one thing. If he withholds contracts, he doesn't supply contracts to people who want to trade, whether short or long, well, that's how he can control things. And this could be institutions, it could be robots, it could be large traders, 50 lotters, or even 100 lot traders who come in 20 at a time. So doing bar by bar observation and analysis is key to staying detached from all the other stuff that happens in our heads while we're trading. And there's a very good book that I highly recommend everybody read. It's called Reading Price Charts Bar by Bar by Al Brooks. It's a great book. So knowing when not to trade is more important than knowing when to trade. When to trade is easy. We have a signal. The signal method is a structured excuse to trade. But where the signal is not present or recognized, that is the method that we use to know when not to trade. So what do we do while we're not trading and while we're waiting for a signal? Well, we keep reading the price action. We keep going left and bringing it forward to see what's happening on the hard right edge and who's in control and the flow of supply and demand and the dynamic support and resistance and also the stuff that starts to construct itself on our charts. Traders who keep looking for a trade are more likely to see what they want to see. So if we keep looking for our signal, that's, we may see a signal, but we forget the other parts like support and resistance, the speed of the bar building, whether it's ticking down on down volume or ticking up on up volume or vice versa, where it's ticking up on down volume. The pattern of the opposites of ticking up on down volume means someone's just pumping, but it's really not being participated by other traders. It's somebody's just pumping the market in either direction, and that's very telling. So traders who keep looking for a trade are more likely to see what they want to see, and got to be careful about that. So focusing on reading price charts, that's the work we have to do, and taking a successful trade, that's the reward we get by our ability to focus on the important features of reading price charts. The most important feature of price is to know who is in charge. This is going to tell you whether you should be going long or whether you should be going short. The supplier can choose to fill the demand or not. So that means they can either hit the bid or they can hit the ask. They can do whatever they want, and they can control what you're going to be seeing on your chart. So by withholding supply, traders tend to get anxious and they start demanding fills at poor price levels. So you see a signal and you want to get in where you want to get in, but it may not happen where the supplier may withhold. Remember, he sees everything you see plus more. He sees the patterns you see on your chart. And electronically, there are things like pattern sniffers who actually trade counter super trend, counter moving average, counter CCI, counter Bollinger, etc. They have these patterns all computerized, and they can set up scenarios where indicators and combinations of indicators will fire, and they can trade against them, which makes it very, very difficult, which is why everybody gravitates towards automated systems. So they tend by withholding the supply, traders tend to get anxious, and then they start doing crazy things, like they'll start running after it, things like that, and they get caught up in that lack of action, and they become easily manipulated and fooled to take desperate entries. So trading in the direction of supply, and that's what we call the trend. That's why trading with supply or trading with the trend is the most important thing. Counter trend trading is a reliance on a hard line supplied by somebody. Somebody said, nope, no further. You'd get no more contracts. It hits a brick wall, and then they instead of filling the bid, they start trading against it, and they overwhelm all the traders who want to buy, and they start selling down. And that's the 3BR is like that. When we hit that brick wall of we can't go up anymore because there's no more contracts to buy, and at the same time they overwhelm the buyers and they run for their stops. So these patterns happen over and over. Concentrate on those things and don't worry about finding a trade. It should just kind of pop out at you.
So market just opened, and we've had a nice little run to the downside. If it closes up, we've got a 3-bar going up, and I'm going to let it take it. I know that we're in the middle over here, but we've been steadily rising up, and we've had a nice little pullback to the downside. Got 100 in the kitty from before.
Order
See
filled.
if it makes its way up. And you know what? I don't have my internals on the side of it on the new chart. Oh, I can't believe this, Tony.
You traded right in the middle.
Thanks, Ed.
Stop
Thanks, Ed.
filled.
In this pattern here, we have a red line, and then we have that, not the bright green line, but the lower green line down at S1. So our swing is all the way down there. That's our swing. It's making smaller swings as it moves its way up, but it hit your red line. If you look left, that's a double top to the 421 event, right? That was a double top. So it didn't really go anywhere, and it came back down to the middle, which is where you got in. I guess it was the 3BR with but our true swing was still a little bit lower. Yeah, that's our real
even
swing.
in here where we're,
Yeah.
even this area here is a problem, right?
Yeah.
We got the POC right in this vicinity. It's moved up a little bit since, but all of my lines have moved up.
Yeah. So when I'm trading, I try to go for the widest zone. If I look left, and I've got a really outside pivot and a really low outside pivot, and all my inside pivots are starting to squeeze in and stay in that zone. So if I start looking at 421, or what is that, 430 maybe, that high pivot where that red dot is up there. Yeah, if I see that, and then I see the low one at 608, right?
Yep.
All the way down to 608. Okay, so that's my real swing, because I haven't taken out that low, and I haven't taken out that high. So that's my high and that's my low, and everything else in the middle is starting to squeeze in. It's kind of meandering its way up, but it's choppy, and that's called chop. Even though the swings may be big for quick scalps, I need to have the direction. The best direction is up. We can see that because we're making higher lows, but we're not making really higher highs, not compared to the one all the way to the left. So it's just kind of swinging its way up, making slightly higher highs, slightly higher lows, slightly higher highs. And as that starts to happen, the best place to trade is the lowest part. But as it does this, it gets more choppy, and it's called, it looks like a mess, right? It's starting to get really confusing in there. You got a lot of 3BRs, and it's choppy. The range may be great for small targets, but who wants to trade two tick targets, 4 tick targets, especially if we want to get the trend. So we want to get the trend. We want to get it from the lowest possible swing zone. It's interesting because on this trade that you just took, they got the early takers, but they
Yep.
they fooled everybody.
And they went down one more swing.
Yeah, they
They
went down
down
one
to
more
the bottom.
to the S1. Now S1 is very important. Those are static. Those are much more reliable than the dynamic one. But when you get a dynamic and a static line up, those are pretty good. And remember, the dynamics are always made to be broken. They're made today and broken in 5 minutes. So they're much less reliable.
So
That's
we've
why
made
you
a
keep
new
moving
high
them.
over here.
Sorry?
We've made a new high.
Order filled.
E4.
Yeah.
Target filled.
All right. Came right back in a little bit higher than the previous low. Previous high.
So if you were to go long,
Trying to recoup.
we would like to, if we're going to go long, the bright green line, maybe.
But the
Anything
bright
else?
green line's the POC, Ed.
Oh, well, then maybe we shouldn't do that.
Well, I tried that over here. I got burned. Let me just stick to my lines.
Yeah, we
So I've got-
always remember the pain.
Always remember the pain. Well,
We tend to.
why would you say
always.
you want to go long in and around this vicinity?
No, I didn't. I said maybe, but if it's the POC, remember, I'm only going by your chart. I don't see your 30-minute.
Well, the 30 minutes is here. It's the same deal. We're right. We got cleanup bars
Oh,
on either side.
yeah. So if I was to go long, and that's the POC, I would go S1. That's where I'm going to go long, if I'm going to go long at all. 4070, 4072 area. That would give me the best stop and a better reward for my risk. But the short you took, yeah, I would take that short too, because we made a slightly higher high. We took out that one big swing, and yeah, why not? It hit a brick wall. It's 1, 2, 3, 4 5 bars up, so much better than 3.
Yeah, this one over here in retrospect, I should have been, I took this because it had come down quite a bit, and I figured there's at least 4 ticks in it to come back up, and there's a good chance since it made a new high, they're going to ride it up, but they came all the way back down, and I forgot the advice that I was given Tucson earlier to make sure you trade near the edge, because the real stop is still back down here somewhere. So anyway, it is what it is.
Yeah, so on that bright green line, we would need to see a box, some sideways action or something, or a 3BR, which is not going to happen now. Or we wait for the bottom, yeah. We wait down for S1. So the early takers might have taken that bright green line. They're offering you that bright green line.
It may very well work, but I'm not taking it there. It needs to come down one more leg. In fact, what I'd like it to do is I'd like it to tap S1, trade down lower and close back up. And for that, I'll use a 4 and a 12 instead of just this. I'll take a bigger bite out of it. Maybe even a 20. See if we make it all the way back up to the line over there. Well, one thing that's very different this morning than what we've been used to seeing. Yesterday we saw the market and we had all of the. I'm not doing anything, so we got a minute to talk here. Yesterday the market moved down substantially, and when it moved down substantially, come on, right? There was a big whoosh all the way down. There was very little trading in all of these little zones all the way down until they traded down here, and then they slowly worked their way back up and filled everything. This morning, look at the size of the value area. It is minuscule, right? Right, and it's denoting that the range is very, very, very small. It keeps on narrowing. We're trading in that same little zone.
Looks like a 10-point range, maybe 15-point range.
Yeah. So anyway, we're going to put this over here just to keep an eye on it. And yeah, that's fine. And then I'm going to grab this one and I pull it back. Got myself in a predicament this morning because I didn't add my indicators and I don't want to lose my delta along the bottom. So I'm going to have to play with this a little. All right, so net of the two, I'm down 100. Let's see what happens here. Remember, if they come out the top, likely they're going to come down the bottom. So let's see what happens here. This is our most recent ledge. Really, we got down to this line over here at 65. But we got S1 sitting over here. You know what? If this closes up, I'll try it long for 4. The delta is kind of negative, but we're still sitting near that line over here.
Yeah, when it gets something like this, when I see the delta change is when I'll start thinking, okay, maybe I'll take the trade. I have to see the delta and the volume come in.
See it come down. If we get another bar down, and that's probably not going to work. Wow, look at the number of people selling. They're just tossing it up into the wind.
Order submitted. Order filled.
Looking for 4 lousy ticks, please. Come on, go back up there. So the delta goes from minus to almost down to 0, and it doesn't follow through, Ed.
Yeah. You have to wait for it to go positive. It could be positive delta on 3 trades if 2 of them are to the upside, or the direction you're looking for. So you need to, it needs to have volume in there. It could go positive on 3 trades, and it's not enough to really do anything. I think this one's going to work because it came back up to the top.
I don't know.
Yeah. Look, your delta's shifting. There's some positive coming in. Now I see volume on it. Yeah.
Target filled.
Alrighty.
Yeah, that delta is important. If it's not there, it's not there. And if you take the trade and it's negative when you take it, it's more risky than it being positive when you take it. So it could be that you just missed that trade. It's possible. I would have still taken this trade because that was the area to trade from, was the S1 area. Did you do the long-term one, like the 4 and the 12 on this?
I took 5 ticks.
Oh.
Because I got in with a fill of an offset of 0.
Oh.
Order filled.
Oh, sure.
What was that? Maybe you
Target filled.
You got lucky.
Well, no, not lucky.
Was that a signal?
It was a signal. It was a 3-bar, but I wasn't paying attention.
Oh.
Just give me 4.
Target filled.
Thank you very much. You were allowed to get lucky every once in a while, Ed. There was a hockey player that was talking about a very close win and that the fluky goal went in. And you know what he said, Ed?
What?
You have to be good to be lucky.
There you go.
The trend trades usually tend to work out much better than the counters, and they've got more ticks in them. But we're sitting right in this area of support.
We're sitting in chop right now. So you got to be careful. This is the POC. It's above us.
POC is further, a little bit further up from where we were.
Yeah, so we want to trade from as low as possible back into that POC until they take out that blue line you got down there, which is the
We don't
final
have to
swing.
trade.
Oh, you don't have to trade. You're right. You don't have to.
So I'm paying attention to the 30-second chart at the moment. I've got two charts here. I've got this guy here, right? I'm not taking anything yet. So we had a nice little run up, push down, doing its thing. Now our delta is still sitting down here. It'd be nice to go long in here, back into, but I've just traded twice in here. I'm going to be patient. I'd like for it to come down. If I'm going to take it again, let them come down and take all the long stops that are down near 65. Wait for the delta to come up and see how it goes. So that lucky trade turned out to be a monster, Ed.
Yeah. Well, there's your blue line.
There's my blue line, but let's let it close. I'd like it to trade lower and then come back up, and then I'll do the long on close. The delta has paused itself out, but it's kind of discussing it, right? And now they're muscling it through. You can see the number increasing down at minus 400. Right. So this business that we talk about, the bars and where the momentum is and so on, you know, you can see it actually happen in the delta, right? Yeah, I'll try you long here for 4. You can see it happen in the delta. The delta stopped right near that line. They were minus 400, and all of a sudden there's a whole bunch of buying going on. Well, why is it going on? It's because these guys over here are defending their position.
Order filled.
All right, looking for 1, please. Don't make me start over.
You're going to swing for the fence on this one?
Am I? No, I'll just take 4.
Target filled.
Oh, too bad.
Ed's my conscience. What's the other word for my conscience?
Jiminy Cricket?
Oh, God. You still make me laugh, Ed.
Tony, morning to you and Ed, everyone.
Morning.
What's your your gold line representing? Right
Okay.
here.
That gold line there? Okay, so
Yeah.
go back, right? Where is the most recent faraway swing on a big chart? So it's this guy right here, right? So this is our most recent low that we punched down from. You know, you might have a line here, you might have a line there coinciding with this, but the most recent swing on a bigger chart is sitting right here, right? Down at 60.25. So what we're going to do is we're just going to be patient. We're going to wait for it and do our thing. If it comes down there, look at what happened. Huh? If I go back further, our next big swing is over here. So on a bigger chart, for sure, there's going to be people that want to buy in this little zone. So if it makes it down to that this yellow line, it's clear, right? There's no ambiguity about where it is. Is it an open or a close like Ed decides or whatever? It's a swing with nobody else anywhere near it. And it's a little, we came close to it. We haven't gotten quite there as yet. So that yellow line is just reminding me that if it makes it down that way, I definitely want to try a long. And that's one of the ones that I'd want to hold for the fences. Now, Ed said, well, you're going to hold this long, right? and I'm sitting here yapping. I missed my my 3-bar on the other side. The problem is we really aren't near a really big area of support. We didn't even take out this swing down here, right? Not yet, right? The place to try to go long and hold for the day, if you can hold it, is down here. My other problem is I've only got $125 in it for the day. Or do I? No, am I at 235? Really? Wow. It adds up quick. Yeah, now look at that. Look at that. So I'm near, technically I'm near target because I have 100 on this and 125 on this one. I only need one more trade to make my day. Double bottom over here. Now, one of the things that I've learned from Ed is that you don't need to be waiting for this bar to close to take that trade. The reason that we wait for the bar to close is because we want confirmation, right? But why not consider taking the trade right here down at the double bottom? Where's your stop? If it trades 5-6 ticks lower, you're out, right? But if we had taken it here, like Ed usually does, near a double bottom or a place that he considers a good line, you know, most of the time he's out even before that we're considering getting in. And it's a good way of actually doing it if you give yourself a small stop. Remember, small stops, we can come back from them all the time. Okay, this is the, we've gone down 1 tick lower than our previous swing from 3:53 in the morning. Let's see what happens here. Both of our with trend trades were worth bucks. All right, so I need, how much do I need for me to get my chart to show the pretty picture? I need 5 ticks. All right. I can get another 5 ticks. That's one morning. That's 5 ticks on 2.
If you hit that yellow line, how far away was that yellow line?
It's not far.
No, I mean to the left. To the left.
The yellow line. You mean how many days back?
Yeah.
I think it's 5 days.
The beginning of this week?
February the 10th. So last week. 7 days. 7 business days because we only bought the days.
Yeah, I would buy that yellow line.
So the trick is on these yellow lines is even if you take it with one contract and you give it some space, right? Because likely there's going to be a big rejection coming back up from it. Let's see what happens. Here comes our yellow line. Our yellow line was sitting at 60.50, 60 quarter.
Remember, it's always a range within 6 ticks or so. Oh.
Somebody wants me.
The longer you wait, the higher you take it, the bigger your stop's going to be.
Mm-hmm.
Usually, I put my order like a tick or two above the line so that I get in. And I'll take a first target and put my stop right below the yellow line. If it taps it again and takes my stop out, if the bar comes back up again, I'll try it again. Sometimes it takes a couple of times because everybody sees it. Now, it could just run right through it because too many buyers come in and it's just more profitable to go down. But
so the
if it's
delta is still
important,
negative.
Yeah. If it's important, you know, if it's an area they want to hold because they don't want the market to crash and burn, you know, then they'll hold it and they'll just pump whatever it takes to keep it.
That's interesting. We've got 567 more selling to get down there. Thousand. Ooh. So one thing to pay attention to, and I learned this from Lav, Ed, and you've pointed this out before a few times. Pay attention to the place where there's a ton of volume. Usually the place where there's a ton of volume, it's kind of like an exhaustion push, and they've exhausted all their contracts. They're doing their thing, and they're actually going to turn it around from there. So sitting on the line, probably not so wise. We would have taken 12 ticks worth of heat so far. Okay, there's buying going on. We went from minus 500 to up. Now we're positive. All right, let's do this. I'm halfway down this bar.
Order
I'm
filled.
going to try it here. I don't want to get back the entire day.
Next up close bar.
Next up close bar?
Yeah, try and get 2 up closes in a row.
Up filled.
Wait for 2 up closes. Remember, it's got a box out here, or an up, down, up.
I thought for sure it was going to come halfway down up the bar with our negative, with our delta coming up. I would have thought for sure it would come up. Okay, fine. Box.
Yeah, wait for it to up, down, up. At least up, down, up, or up, down, up, up. With a higher high on one of those bars.
Oh man, it's
it may not. It may crash and burn here. What's your next yellow line?
It's down here. The next swing. Oh, we got S2 below us.
Mm-hmm.
So I find it interesting that the delta is positive. So they're trying to hold it, but the market still is inching its way down.
Yeah, this may not happen here. We're gonna have to wait for it to turn, like I said, a shell up a box or something like that.
So had I sat for the entire risk of the 12 ticks, I just give back 6 ticks here. Actually 7 ticks.
Okay.
Somebody left. It was Tyler looking after the kids. So there's 2 up bars, Ed.
I would do 59.75 or something like that. Yeah. You want to get as close to that low as possible for your stop so you don't have a big stop.
Order filled.
Hey.
Oh.
What just happened?
What happened?
My auto trader stopped.
Oh, you hit buy bid, not discretionary long or something like that?
Oh, I was pretty sure I hit the discretionary long. I'll have to check the log. Come on back up, buddy. Oh, you know what?
Oh, you're not going to swing for the fence in this one?
Target filled.
I just realized that I was... All right, let's do that. Let's do that again. Come on back down a bit. Something happened on that. I've not seen that. I've not seen it crash in a long, long time.
Remember, you're in the 7 o'clock no trade zone.
Oh, yes. Oh, that's another reason to take it. Wait for it to come out of this zone right here.
Stops getting bigger.
I know. Yeah, it was definitely a discretionary long. Didn't like something about the discretionary long. There's an error message in my log right there.
If you trade above your blue line, definitely try and get back in on this there. Maybe 61 and a quarter, 61.50. I mean, you know, this.
Order
Don't
submitted.
know if it'll work, but you definitely want to take the turn. Yeah, it's getting away. $62.
Right at the top of the box. Order is in sitting. It's sitting at 62. Actually, 60. Move it up one. So if you look at the dome, you got the dome open. You can see how thick it got over here. See, look, right down here.
Away.
Look at the thickness of it, right? For it to come down, there's going to have to be a lot of people that it goes through. Oh, well. Missed it. So let me do this.
Order canceled.
Let me do that. Okay, back out to the bottom here.
Blue line.
We're long at the blue line.
Yeah.
Let me hit the discretionary long when it gets up there.
If the bar straddles the blue line, take the long on close. If it just if it trades through the blue line, take a long on close. If it doesn't, well, it's going to be a tap, and you know you have to just decide. And the stop is really getting big right now. So I'd say 61 and a quarter is about as high as you want to buy it, so you can fit your stop in there. Yeah, right about there, maybe 61.50, something like that. Your stop is below that low.
You can see all the volume spikes. I mean, we're talking to get it to go 10 ticks, almost 15,000 contracts. This whole zone, they pushed it all down. And we had a couple 100 lots in the middle of here as well. All right. So where am I sitting at the moment? I'm sitting at 150 for the morning. And I lost all my trades, Ed.
Yeah, well, I would put a limit in at that blue line. The habit is, you know, when you go on the live dome, you want to make the same decisions. So realistically, you're going to be trading limits. It's going away, man. It's just bye-bye.
We can try it short down here. Our POC is moved. Our lines have moved actually a little bit.
If you wait for the long, you'd be in a position to take a bigger reward. To take the counter, it is trending up again. Now we've got a big outside swing down at the low, and if we look left, the big outside swing is at 936. So if we can get in long from that blue line, or maybe even the green line if it comes back and boxes out and makes a shelf, and we get a turn, we'll shoot for the 40.85 target. So very often what I do is I'll put my order in, I'll go get some coffee and everything, because that's the trade I want. And if it happens, great. But if I'm in, if I want to just get out of here and stuff like that, well then I start scalping iffy trades, and I don't want to do that. The best trade is that blue line or that yellow line. It may never happen. But then the next best trade for the reward is that red line up on top, or that blue line up on top. 40.84 looks like that. And then everything in the middle is, 3BRs, box breakouts, who got hurts, the little ones.
Order submitted.
Oh,
Order canceled.
thank you very much. That gave 4 ticks.
Okay, so if you take a 3BR that fails, is that what that was, a 3BR?
It hasn't failed.
Oh,
Hasn't
okay.
failed.
It didn't fail.
Not yet, anyway. Come up halfway up the bar, I'll short you.
Well, because we already went down, do you still want to short that? How about maybe taking a long so you can get up to that top red line up there?
Order filled.
You want me to do what?
I don't want you to do anything. I'm just thinking.
Target filled.
Okay.
So we want to get in with the supply, right? Supply is to the upside.
Yeah. Well, okay, so I'm sitting at 250 for the day. I got my 250. Time is it? 10:07.
Buy the
Give
blue
another-
line.
I got my 250 and I'm ready to go home now.
Buy the blue
Buy the-
line.
The blue line down here.
Yeah, buy the blue line.
Order submitted.
It's got to cut through a lot of orders to get down there, Ed.
Yeah, but
Thanks,
look
Tony.
left.
See you on Tuesday.
Look left.
See you
That's
then.
Monday's a holiday.
Is it a holiday? What holiday is it down there?
It's President's Day. Market's open for half-day trading, but half-day. So see you Tuesday.
See you then.
Yeah, but it does that all day long. It gets through all this volume because it manipulates the market.
Mm-hmm.
So why not? It's going to have to work its way down there and spend a lot of money, and it's going to want to have a lot of shorts in the market. And then it can run up on their stops.
Order submitted.
What? Oh boy.
Oh, that's what that is.
What's that?
I'm just looking at some messages in the log.
Order filled.
Looking at some messages in the log.
Target filled.
Okay.
Yeah, yeah.
Now I'm done. I'm at 350.
Oh, you don't want to buy that blue line?
The order's down there. It's waiting.
Well, do you need it?
No?
Okay, I would take it off and keep your money. But let's look at it because
sounds like Ed is
He's
trading through you and got you rolling the dice a few times there.
well, you want those $500 days, right?
Oh, yeah,
goodness.
yeah.
So Leaf, I've got some changes in this thing, but I've got a couple of error messages that are coming up. Would you like to have it with the error messages, or do you want me to tidy it up?
I just assume right now, considering Monday's a holiday, I'm not going to trade on Monday. So just maybe work on it over the weekend and shoot it out.
That's fine.
Be fine. I always like, of course, like I told you, the bleeding edge, but
Not that bleeding.
I've got enough that I'm worried about at times.
All right, so we've got a long setting up over here. I'm going to pause it. Not going to take it.
Just so that I'm clear, you're going to work on, or do you feel necessary to work on the inner button problem?
I don't like, now that I know about it, I don't like it. Because it is possible for someone inadvertently to do that. And I'm going to see what I can do to move the focus. Because what happens is when you take a trade, look at this stupid market, Ed.
Yeah, well, still leave it there. Leave it there. You never know.
The idea is, so check this. Okay, I'm not in a trade at the moment. You know what I'm going to do?
Order
I'm going
canceled.
to pull that. So I'm going to come over here and I'm going to take my chart. Okay, here's my chart over here. I'm going to make sure that I'm not in that account. Okay, so I'm in Sim 101, right? So if I come over here and I take a short,
Order
there's my
filled.
short, right? Now watch what happens. If I click on the screen, right, and I hit my enter button, it doesn't matter. The problem is that it remembers the last
right.
It remembers the last place that it touched, which is the whole problem. So, I mean, I can come over here and short it. And the next time that I hit the enter button, it's going to work again. It's going to short it again. But look, I click over here. Now I hit the enter button and it's not doing anything. So I think what I need to do is I need to, after that I click any of these buttons, I need to put the focus somewhere else. And I'm not certain what the best way of doing that is, because I've got tons of buttons everywhere.
Yeah, you're the expert on it. I just let you know what I found.
Yeah. Well, if I do that, it's only going to fix my buttons. It's not going to fix the problem with NinjaTrader having it remember that it does that.
I seriously doubt anyone in the group is using the Ninja buttons much. I mean, that's not going to be typical. It's mostly going to be your buttons that I think.
Yeah. Well, that's why I don't like the idea of it accidentally triggering a trade. I've always been of the opinion that I need to make it as complete idiot proof as possible. That someone isn't doing something foolish that would get them into trouble, and that's something.
Wait a minute! It sounds like you're calling me an idiot.
No, that's not fair. That's not. I mean, that's an idiom that the programmers have. You have to make it as solid as possible, right?
Right.
So, anyway.
So actually, what I'm hearing is that we all push Tony's buttons, and that's how we become idiots.
There you go.
Well, I am grateful for you guys being here. So don't go there.
Well, Tony, it's certainly enjoyable. I appreciated you too.
All right.
No,
But
who's got who's got the list of edisms?
Target filled.
they're all rattling around in my brain.
Oh yeah. Has anybody written them down actually?
You know, I'll make a list.
Okay.
Okay. At the top of the list is look left.
Yeah, the top left. Which,
Look left.
if you recall earlier, I was telling you about Friday and how I thought we were heading back there.
Yeah.
And here we are.
Yeah, we're here for sure.
And that, if anybody's listening, that first chapter, which talks about building the bars of the book that Ed was talking about, you just see the infighting, if you will, or between the longs and the shorts. And it kind of tells you maybe wait this one out. And I see that working all the time. So anyway,
That's the Al Brooks book.
I'm right with Ed. Yeah, read that first chapter at least.
You know, maybe
and the rest of the Bible is awfully long, but anyway, I'm still working through it.
Maybe it's true. Is Ed still here or is he gone? No, he's still here. Maybe it's true that these Edisms are just Al Brooksisms. Because he echoes them over and over and over again.
Oh yeah, all the thoughts in my head are from accumulated knowledge over time. I couldn't tell you exactly where they come from, but the three main books that I have read over and over are the Al Brooks book, Reading Price Charts Bar by Bar, the Tudela book, which is Trading Triads, and the Goshen books, which is Trading for the Serious Trader or something like that.
If anyone wants the list of books, call me. I'll tell you where to get them.
Look Left is a catchy book title. And
A catchy book title. There you go.
So I teach driving, and that's one of the first things I say all the time is look left when you come to an intersection.
Look left. Do you teach people to look right when there's a lane merging on the right side?
If that's happening, yeah. But usually when people come to intersections, they tend to look at the stoplight and look to the right, and bam, they get hit by the car that's coming from the left.
Yeah. All right. Well, I'm sitting at 350 for the day now. I'm definitely not giving it back. I want one chart to say that I got the tally, Ed.
So I guess I would want to challenge Ed, when he talks about patience, go ahead and teach driving. See if you've got enough patience to tell somebody to look left while you're seeing a car come out.
Oh boy. So if you teach driving, does that mean that you have one of those brake pedals that is extended so that you can get at it?
Oh, heck no, I use somebody else's car.
Well, what about self-preservation?
5-point seatbelt? No, I don't. No, it's actually buses. I don't usually do cars, but buses is what I'm teaching, and it's much easier to have them just stop a bus. And they're usually so paranoid anyway that I really haven't had a problem yet. But you'll see start to pull out into an intersection. And you're like, look left, look left, look left. Oh, stop. So far, I've got a good record.
Okay, I'm going to take off, Tony. So
all right,
long,
see you
everybody.
in a bit, Ed. Yeah. So what happens, Robert, when you get to railroad tracks? Do they only look left?
No, you stop